Well, a lot has happened since August.
Yeah, and it's all been terrible.
Yeah, I
No, I'm
think,
kidding. Most of it has, not all.
yeah, it's been a wild ride to end the summer. And obviously, you and I both know, and as majority of people know, September is a terrible month
Hmm.
for the markets. But the recent economic data and the stock market and more news from the political side and other data that's coming out, it has been quite interesting to see how everything's turned out
Yeah.
and the disconnect between the markets and reality, as well as government and reality, and how everyday people are dealing with this, right? Despite what the headlines
Hmm.
are saying, people are living in reality. So, Willie, I don't know where to begin. I mean, I mean, I see two parts here.
Yeah.
There's interesting moments in where we've written a lot.
Hmm.
A majority of that is with your great insight and data analysis of what since 2021, right? 2022, we've been doing a lot more
Hmm.
public papers and analysis that we published.
Yes.
Not just my own rants on Twitter. So,
Those
uh,
are helpful.
yeah, and so we have been right so far in many aspects. And it's
Sure.
some of those moments, there's times where it's like, okay, great, we made the right analysis, but there's some moments in where we go, kind of sucks to be too right sometimes.
No, absolutely. Was it cursed with success or cursed by success, whatever the phrase is? Yeah, it's been since since 21 when people started saying, well, what about throwing all this M2 into the economy? Isn't that going to cause inflation? I think we were one of the few voices like, yeah, you morons, it will, because that's how macroeconomics works. And we were kind of mocked for not being aboard the good ship Transitory. But yet, hey, lo and behold, what happened? Well, inflation peaks at was it 9% or so,
Something like that.
and now we're in a very interesting position where we still haven't really defeated inflation. Lo and behold, you don't do anything meaningful, then nothing meaningful happens. And now we're having a softening labor market. So
Right.
that's fantastic. Job numbers keep getting revised downwards, and it's interesting if you look at the history of the jobs reports and the S&P, they both kind of go up together. But when jobs tank, it's usually a leading indicator of a recession, or whatever the more polite term that people want to use these days happens to be. But what you don't see is what you see now is where jobs are tanking and the S&P keeps climbing. So I don't know what is supporting these market valuations. Maybe it's your favorite innovation, BNPL. Maybe it's hey,
BNPL.
you trigger me, I'm going to
Hmm.
trigger you.
Hmm.
Maybe it's just Americans living on credit cards, and even as far back as July, we saw articles saying that banks are admitting we're getting ready for people to not pay their bills. We're getting ready for people to not pay their credit cards, to start defaulting on their loans. Uh, so yeah,
And you're starting to
I'm
see
gonna.
that. And you're actually
You are
starting to see
starting to
that
see that.
happen. Yeah.
Yeah, the default rates are climbing up to near oh 08 levels. I think we're a little over 4% on revolvers last I checked, and yeah, it sucks, but this is the bed that we've made for ourselves uh, as a country, and this is one of the unpopular opinions again that we're probably going to have a credit event if nothing extraordinary happens.
Right. And back to 2 points you made with inflation
Mm,
battle. Yeah, we've seen some better numbers on inflation. Yes, you can make that
sure.
argument, and everyone's been looking at that year over year, month over month, right? But that doesn't mean the battle's over, right?
Correct.
We haven't hit that target of 2%. Yeah, it's getting better. It's closer to 3% now, but again, it's like anything in life, or like for us, let's say make it relevant sports, right? Just because it's you make it to 3rd and 1 doesn't mean you got a first down yet. You still got to get that 1 yard to get that first down, or it's 4th and inches, right? You're right there, but if you don't get that first down, you're not going to get it. it's football season, so I had to make a football.
How much
Uh,
harder would it be to measure your position on the field if it was fourth and centimeters?
oh God, stop. But for our listeners who, that's a very good comparison, in my opinion, to simplify it. And that's what's the problem is that the Fed hasn't truly won the battle yet. Yes, they see the easing, but now you're seeing Fed Chair Powell kind of making a decision, right? Yes, inflation is starting to ease, but it's not a first down yet. Like we haven't, or sorry, not first down. We're in the goal line, but we haven't got a touchdown yet,
Yeah.
right? It's third and goal or fourth and goal. We haven't really won, but now he's starting to go. Okay, maybe he sees the job numbers, like you said, weakening. And it's not looking good, which we've seen for a while now. I mean, you and I have seen this. We knew that the labor market was going to weaken.
Well, the only
You and I
sector
see,
that's
yeah,
consistently growing jobs for the last year is government.
right. And to
You
me,
can interpret
that's
that as you see fit.
right. And to me, my interpretation is just artificially pumping the job markets.
Sure.
There's so many jobs in the government that are absolutely useless.
Most of
And
them,
there's no,
yeah.
yeah, most of them, there's no reason for them. Um, and, and to me, that's a scary thought, right? It's pretty much all of us listening with taxpayer dollars that are the ones generating the most jobs. We're the ones paying for these
Hmm.
jobs. It's not the private sector. And really, the private sector should be the one driving most of the jobs.
Yes.
That's how this economy works, and that's how it should work. But no, so the inflation battle is not over, regardless of what the headlines say or what the analysts say or economics, economists say. It's not over yet. We're still in third and goal,
Yeah.
not even fourth and goal yet. And now Powell is now pivoting more with a concern about the jobs, right? And
Yeah.
the reason why
He
that's
has
a concern
explicitly
is
stated he's
right,
chasing the labor market target now.
right. And for our listeners, what that means is he's concerned about it because obviously when you have a weakening labor market, people are going to have less money to spend, salaries are cut, and that's going to lead to a recession. You and I
Mm.
have been calling a recession for a while. It's going to happen. There's still a lot of people out there that saying there's going to be a soft landing. We think it's bullshit.
No,
The writing's on the wall.
yeah.
And
Even if
if
you have a
anything,
soft landing, if you land at a price level you can't afford, what have you accomplished?
yeah, and if anything, we should have a hard landing because we needed that a while ago.
Yeah.
I've said it
3 years.
time after time,
Hmm.
right? Is 2 3 years ago he should have raised the hell out of interest rates
Hmm.
and really drive the economy to the ground in a healthy way, and then
Yeah.
it'll ease off. But what has happened now is that they prolong this for so long, and it's creating a massive bubble in the credit. There's massive amount of debts being piled up.
Hmm.
The labor market's weakening at a much faster pace than I think people realized. And someone in the labor department has something to explain, the data people, because those adjustments are wild.
Yeah,
What were the
yeah,
numbers,
they're
Willie?
big adjustments. I
Yeah,
mean,
what were the
on the order of
adjustments?
like 10%. Was the last
Right,
one for now? No, it was 2 months. It was June and July both got revised downward.
right,
So
and that's
yeah,
bad.
and I don't know if you, I think you saw, some of the stats divisions like BLS, Bureau of Labor Statistics, are now facing budget cuts. So and they're changing how they sample the data so that they're actually pulling conclusions from a smaller sample set. So you already have downward revision with a bigger data set, and you have a certain amount of uncertainty, and now you're gonna make the data set smaller. Well, when you do that, your uncertainty grows. So at what point do some of the government's stats become absolutely worthless with regard to policy making? And yeah, you're right. Like it sounds stupid and contradictory to say, well, we should have had a recession. We should have slammed on the brakes. Yeah, but again, it's not that big a deal if you slam on the brakes when you're going 3 miles an hour. Nobody cares. Okay,
Yep.
but when you're doing 30, that becomes an issue. And my concern is we're not back at 2%. Period. And people can say whatever they want about 2% as an arbitrary target. Blah blah. I don't care. The point is, we're not there. If that's going to be the policy, then you're going to stick to it, period. For most of the past several decades, it's been close to that. But now, when you start explicitly chasing the labor market, and Institute of Supply Management just had their Their latest survey as of the 3rd of September, 47.2% of manufacturing expanded in this country in August. Okay, we're now manufacturing is contracting. The job market is contracting. Powell's explicitly stated he's chasing that. U6 is up. We're going to have a rate cut, but we have a rate cut in an inflationary environment. He's gonna drive us into stagflation. Period. Inflation's gonna whipsaw. The chance to hit that target has come and gone.
Yeah,
Now to hit the jobs target, you're gonna make inflation worse.
right.
So
And then we'll
yeah,
we'll
I
we'll
don't
touch more on that as well. We'll definitely touch more on that. But
sure.
yeah, I mean, 100%. I mean, that's what we see that's going to happen, and we're preparing our portfolio and our holdings and preparing our investors for that because there is going to be a 25 or 50 basis point cut. I
Mm-hmm.
mean, this upcoming week, it's September 8th right now. That's the day we're recording this.
Mm-hmm.
Will be published on September 10th or something like that. But this is the final week of additional economic data that's going to determine
Okay.
what that type of rate cut is going to be. And it is concerning to us. We do see a stagflation. But before we get there, I mean, I think the reality you said before, right? The S&P 500, the stock market, is
Mm-hmm.
continuing to go up. I mean, September is always the worst month. I mean, the
Sure.
S&P has been so turbulent. I mean, the stock market's been turbulent since early August. With the carryover, with the yen trade concern. But
Yeah.
it has been crazy. And then over the past week, it's been going down, down. But as you said, overall, you zoom out, the market's going up when the labor market's going down.
Mm-hmm.
And all the data together, when you look at it, doesn't make sense with what the analysts are saying, with what the markets are doing, and what government policymakers are doing. And to us, it's just fascinating to see how people are so blindsided, or so blind, not blindsided, how
Because this
blind
time
they
it'll be
are.
different.
Right. It's doesn't make sense. I mean, fundamentals don't change, right?
Right.
That's anything in life. Fundamentals don't change. What you see is what you get. It's really black and white. And for a lot of these people to try and make excuses or try to add fluff to it, it's only going to hurt millions and millions of Americans more than actually dealing with reality. And it scares me to see also some fund managers and policymakers throwing out policy out there the way they're throwing it out, which we'll break down a little bit more.
Mm-hmm.
That is not realistic with where the economy is headed. I mean, look, you're seeing that, like you said before, right? The labor market is weakening. I mean, we just saw today full-time employment has dropped by 1 million workers in August
Right.
on a year-over-year basis, marking the seventh consecutive monthly decline. And the scary part is, and you've said this all the time, this is why we look at U6, not U3,
Yeah.
when it comes to jobs. What that means is that there are a significant bump in part-time jobs,
Over
or
8.4 million Americans now
right,
have more than one job.
but then there's a huge drop in full-time employment. So
Mm-hmm.
now you're seeing many more people having either A, multiple full-time jobs, right? As we've seen. But
Mm-hmm.
there's a significant drop in the amount of people with full-time jobs as well. And then there's a huge jump in part-time jobs.
Mm-hmm.
And most of them have multiple part-time jobs.
Yeah.
And then you see a huge spike in government jobs, as we said earlier. So all that together is a really dangerous job market. And that's going to be a big reality check for this economy. Because at the end of the day, the middle class is what drives this
Mm-hmm.
economy. And if people don't have jobs and they continue to pile on debt and use credit, there's going to be a big bubble. In addition, on top of that, you have massive government spending that's not being tamed. And neither, by the way, neither presidential candidates are really providing any policy to address that, which we'll get into. So this is a brewing storm that's not helping with
Right.
anything. And AI can't save us. I mean, you can't keep dropping the word AI, right? Because AI is not going to help.
Maybe we should put
And
AI in charge of the congressional budget.
yeah,
It
I
might
think
help. Who knows?
actually might work better actually, because AI
Yeah,
would be like,
probably.
wait a minute, you guys are, or just send a guy. We were talking about this last night, right? just send the accountant or that money manager that you love who has the plaid pants, right, and
Oh, the yeah,
oversized
the
button down.
pleated pants with
Yep,
the brown loafers. Yeah,
exactly. That's who we need making policy decisions when it comes to government spending.
there's
So
you
no,
ever see the
yep,
movie Dave, the old Kevin Kline one?
yeah, that's a good one.
He's a presidential lookalike, and he
Yep,
yeah, and he brings in the like some accountant from back home, like some strip mall bookkeeper, and then he manages to balance the entire
yeah,
budget
pretty
overnight.
much.
Maybe that's what we
Yeah.
need. We need the
Well,
strip mall accountant.
well, it's so funny. What Warren Buffett said that he can fix the budget overnight is, um, if
Oh yeah, yeah.
you,
If you exceed a
yeah,
certain amount, you're no longer eligible for re-election or something like that.
exactly.
Yeah, that'd be cool.
Yeah, people
Not
are
gonna
so broke
happen,
real
but that'd
quick.
be cool.
So the first part of this, our listeners, obviously this is insightful, but what does it mean to them, right? So the first part of this is with all of this, and I think there's all the data, right? Sorry guys, we always bring up data on front of we have split screens on both of our screens. We have the recording side, and we have all the data side because we want to make sure we don't mess it up.
I have
But
15 monitors, and I need them all to write a VLOOKUP.
right, some more data here on the jobs before we head to the advice part because we always like to provide some data, then some advice, not financial advice, but just some general
Opinions.
opinions that we like to provide. This also came out in August. Job cuts at U.S. companies jumped 193% in August
Yep.
to just about 76,000 from 26,000 announced in July. I mean, think
Yeah.
about that. That is a huge spike. And you and I started to see the warning signs. I think a couple episodes ago we mentioned it. A couple months ago, a couple episodes ago, in where we saw a lot more in the headlines that people kind of hide, right? Whether it's
Right.
on X official accounts, not fake news, or on Financial Times, Wall Street Journal, Bloomberg, whatever. We started to see more and more of these things popping up and going, this is not good. And it's funny how it gets, kind of thrown down into like the hidden columns, right?
Yeah.
And then tech companies have announced 5.5 times more job cuts
Yeah,
than
they're
the
leading
previous
the
month.
way, as with
Yeah,
everything else.
so this is a big concern there at the same time. And then multiple job holders, as you said, as we said before, and you sent this to me, account
Mhm.
for over 5.2% of all employed, right?
Yes.
And that's a huge spike from before. Um, because it used to be what, 0.05% or something like that. But it
Something like
was,
that. Yeah. It was. I mean, it was never. Uh, I mean, the mean since '94 was a little over 7 million, and now we're over 8.4 million uh, people holding multiple jobs. Now, percentage wise, yeah, that's a little less dramatic of a jump because we have more workers now than in '94. But the simple fact is that more and more people are having to work more jobs, but when you for every additional job, the additional dollar that job pays is worth less and less of a dollar to you, right? Because you're not just commuting from home to work, you're commuting from home to work to work to work to home,
yeah,
right? You have additional costs that are associated with every additional job. So even if both of your jobs pay the same, which they probably don't, you're getting less and less benefit for working more and more. Now, from an affordability standpoint, you know, the end result of that should be obvious. Okay, it means you're not going to be at home as much to eat, so you're going to have additional food costs because food away from home is still higher, and you're also going to have increasingly higher transportation costs. So I think probably many of these 8.4 million people that are working multiple jobs are seeing is it's getting even harder to get ahead than ever, and
mm-hmm.
it's getting harder to even tread water.
Right,
Like, just,
and I think some of that percentage also is because of COVID effects, right? More people are at home, so
sure,
working at home, of course,
sure,
if both jobs are virtual, obviously it makes it a little bit easier, right, to
yeah,
be able to work two full-time jobs. But I think to the core of it, as you said, it's just everything. Cost of living has just gone up. So
hmm,
the salaries of full-time jobs don't necessarily match now
correct,
with the pace of how much things are costing. In addition to how much tax has gone up, right? So there's government effects there.
Yeah.
And this also reflects with companies, right? I mean, companies are continuing to face more hostility from governments, right? This is global, as well as their cost of goods, right, and services to be able to operate as a business. And AI does play a little bit of role too. I mean, I know
Of course.
AI has, I mean, that's the one valid use term of use of AI, not just to spike revenue or earnings reports, but it does play a role in jobs, right? Because AI assistance, it
Mhm.
hasn't truly replaced everything, but AI has made operations quite a bit smoother, right? More efficient
Right.
in many aspects. So that definitely plays a role. And I think that plays a huge role in not only the multiple full-time jobs, but also the spike in part-time jobs. Because
Hmm.
I think based on what we've seen thus far, there's a lot more part-time job offerings, not just the usual jobs, right? Not just the blue collar or the like the or the retail or hospitality jobs, right? But this is now reflecting into white collar jobs because there are certain jobs, like let's say copywriters or marketing or graphic designers and all that. Now you have so many tools now that can assist in editing or in copywriting and all that, so they can pile on more for one
Yeah.
person than what they can before. I mean, look, shout out to Riverside, right? Our podcast, we're using Riverside app, right? Which is
Mhm.
used by Gary Vee and others who are the top podcasters. And Riverside, I mean, it makes life a lot easier.
Sure.
I mean, we only need to use a part-time editor and graphic designer because Riverside's app already does a lot of the editing itself and has AI to automatically identify key moments of the podcast that can go viral, and automatically, size it up and the quality. So that is a good example. So, and on top of this too, I know you and I were talking about this before. The participation rate of the
Oh
U.S.
yeah.
labor force
We're a
is
solid
really
D
bad,
in
right? I
participation.
mean, yeah, participation rate is set to decline to 61.2%
Yeah.
over the next decade, and this will mark the lowest percentage since 2020 pandemic, and the second
Hmm.
lowest in roughly 50 years.
Yeah.
So the pace is, instead of zooming out like the stock market that goes up 45 degrees over 30 years, right now you're about to see a
Participation is one
bit
of these.
now participation rates going down.
Yeah.
So that is extremely scary.
Yeah.
Um, and by the way, this data excludes prisoners and people in military service, by the way. So
Right.
that's something to keep in mind. So this is just the general market. And then on top of that, you have the slowest population growth rate since the
Hmm.
tracking of BLS in 1948. So there's two sides. People that are giving up on the labor market. A big part of that, I would have to say, this is our opinion,
Mm.
government make it easier just to live off the system,
Yeah.
right? So that's a big factor. Also, people's giving up because of how everything is. You're working multiple jobs and then you continue to struggle with financials. I can see people losing their minds. Um, and then the population growth is slowing down. And there's
Hmm.
many societal factors. And I think everyone can listen to our other podcast, Abolishing Nonsense, with our co-host Brian Doe from Pasadena Therapy, one of the experts in men's mental health. I think there's a lot of issues with that as well, with population growth slowing down. So this is something to keep an eye on. I don't know if you have anything to add to all this. I know you do, but do you want to add some thoughts on the overall labor market now that we've given? I think that's most of the insights right now from
Oh,
the
absolutely.
law market. Oh, and just real quick, by the way,
Huh.
sorry, I was going through to make sure. One more thing: U.S. companies add the fewest number of jobs since 2021. The
Right.
ADP data shows.
Yep.
So so now we're continuing to see these types of numbers popping up. But yeah, go ahead.
Well, it's this is one of the issues with long-term thinking and not having it. So you mentioned participation rate. We're at I have my Fred database open here about
You love Fred.
62.7%. Yeah, I mean this is one of the coolest data repositories ever, and it's 100% free. Like, what more do you want, right? So participation
Right.
wise, like, yeah, we had a little dip in 2015, but we're at the lowest participation rate since Take a guess.
COVID.
January 1978.
Oh, even further
Literally
back.
have, yeah. So we are the least participatory uh, labor market in 50 years. Now, that has to concern
Wow.
everybody. And you did mention fewer kids, birth rates. Well, yeah, they kind of go hand in hand, don't they? Uh,
Yeah.
we posted based on the MIT budget, which for those who aren't familiar, it's 50% of your pay goes towards required expenses, rent, utilities, whatever. 30% towards discretionary, 20% towards savings and investments. That's the ideal, right? That's the target. In no county in the U.S. is the median income high enough to meet that target for a family of four. So what has happened for, a long time? Well, people just skimped on savings and investments, right? Well, what's been happening lately? We saw this even, starting a few years ago. Well, millennials are killing the birth market because nobody's having kids. Fewer people are having kids. Why? Because they can't afford it. Because it costs about 300 grand for a kid to be born to go through college. And people are starting to realize, well, we have to cut back on something. So, my big question is, I know Elon's been tweeting about this for a while now regarding the threat of population collapse, at least within, highly developed, highly technological societies. Who the hell's going to do all the work?
Yeah.
If the participation rate is going to continue to go down and the percentage of the labor market holding multiple jobs is going to continue to go up, which both of those trends seem to be true. I mean, are we just going to be a nation of part-time gig workers, and we have to have AI and robots because we have nobody to replace us? Like it starts to bring up a lot of very interesting and depressing, questions in terms of economic sustainability. Yeah, and it's honestly, I think a lot of this is just kind of our own doing. I think we're embracing the wrong so-called innovations, like your preferred BNPL. Uh,
BNPL can literally go die. And my challenge of a debate and calling out all the CEOs of BNPL at a Bloomberg
One day they
event
will
or
answer.
or even a live stream is still on the table. It's part because they're afraid, because they understand that what they're doing is I mean, I get their reasoning for doing the company,
Sure.
but there has to be limits. I mean,
Well,
it's
absolutely.
extremely
And there has to
dangerous,
be transparency. And so
right?
much
And
of that.
transparency.
And people are like, well, how is the consumer so resilient? How is retail so resilient? If the economy's
They're
supposed
not
to be doing that,
resilient.
they're
They're
not
literally
resilient.
given cheat codes, right?
Yeah,
Uh,
they're living
You have
on
no
credit and
interest.
BNPL. But at
Yeah,
least
I mean,
credit you have to report. Okay?
right? BNPL, you don't. And look,
BNPL is financial debt.
if you can't afford pizza, right? And you have to pay pizza in 6 months, six equal payments. That's don't eat a fucking pizza. Okay, like figure like, so it's so for these guys like Affirm and Klarna to enable this, to me it's extremely dangerous. And what pissed me off was seeing Affirm's earnings this past time
Hmm.
spike big time. I mean, it was a huge spike. I mean, their
Yeah.
revenues went up dramatically, and to
Yeah.
me, that's a bad indicator. I mean, you and I were talking about that. It's another economic indicator of the stress that the consumer is going through. It's not consumer resiliency. It's just
Oh.
it's consumer trying to survive.
This is
Um,
where I think you can see that split in jobs
right,
versus S&P. I think it's
right.
driven by BNPL.
Yeah.
And
Well, I think it's BNPL, and I think it's a lot of government subsidies, and also I think a third key part of it is just continuing to dig into credit, right? And savings have dried up from COVID, and I think now that savings over, people are now digging deeper into their credit, which is why we see credit card debt at all-time highs now and continue to climb. And then BNPL on top of that. So not only do people have their savings to call into, right, but then they had their credit limits on their credit cards. But now you also have BNPL on top of that. So it's many layers of this onion that's being peeled, and you and I are crying already, but they're not.
Yeah.
And that's what is scary that we're seeing. And BNPL is something that is astonishing to me that you and I are not about too much government regulation,
Right.
but I think this is one of the situations where they should step in and go, wait a minute, we need some transparency here. We need to understand what you're doing.
Mhm.
Maybe there should be limits to the minimum of what you can borrow, because again, if you have to do 6 monthly payments for a 12 pack and a pizza, there's a problem, and we need to address this. So no, you're definitely spot on it, and I think BNPL could go to hell. I can't continue to say that enough, and I hope I have the chance to do a live
Can
stream
you
or
just say
some
it
kind
one
of
more
event.
time?
They can go to hell. BNPL and Klarna and Affirm can burn for all I care, and I hope to have a live stream with them one day and completely rip them apart on why they're a problem. They're one of the businesses that are absolutely useless out there.
Yeah. Well, I think they're delaying a lot of the inevitable, right? But by doing so, I think the inevitable will probably be worse, right? Like
Yeah,
if you default and you have 10,000 in debt, okay, that sucks, and you default. If you can rack up 20 and then you default because you're using credit cards on top of BNPL and it's going out to the farther and farther to the margin of your income, I think it's going to hurt a lot more. And
yeah. I mean,
I fear that
that's
that's what's driving the split between economic data and market performance.
right,
It,
and that's
it
the
can't be
credit
that.
issue, right? I
Yes.
mean, end of the day, all these defaults, someone still owes, right?
Yep.
All this out there, there's still a gap. I mean, it's just like back in '08, right? There's still that
Yeah.
gap of, hey, someone, the money doesn't just disappear. That money you owe for pizza and a 12 pack or a house or a
Right.
car or whatever, if that doesn't, someone still is owed. Someone still needs to pay
Mhm.
that. So that's where the big problem is. And I agree. I mean, but before we continue, I think for our listeners, some of the opinions that we have for you is that with the tightening jobs, right, and with the low participation rate, um, with increasing layoffs
Mhm.
and which is continue to grow rapidly and with less job openings. I think the biggest thing right now is I think people just need to really tighten down and be responsible with just basic accounting, personal
Yeah.
accounting, right? I think, look, I mean, no job is perfect. No one's ever fully happy unless you're us. We actually love what we do. But again, we're our bosses, right? We're entrepreneurs. I mean, don't get me wrong. There's moments where we want to freaking uh, pull our hairs out, but end of the day, we still love it. But again, there's
I think
no,
it's a little late for me.
yeah, there's no. Well, you're an engineer too, so there's no perfect job out there. There will be moments and where it sucks, but end of the day, what are you getting? You're getting a paycheck, right? You're able to pay bills or as best you can. I have a roof over your head. So I think if anyone wants to make changes, right? I think the time is not really now,
Mhm.
especially over the next year. I think the best thing to do is just to sit tight, do a great job, right? Obviously, if you think you deserve something, kind of relay that. Um, but gotta hang tight because
Yeah.
this is not a good moment for employees, nor is it for employers, right? Because
No.
everyone is getting hurt. So there's a delicate balance here, and you don't want to jeopardize anything because you may have a nice full time job you may not like, but I think it's better than 3 or 4 part time jobs.
Mhm.
So um, and but yeah, I mean that's what from my perspective what from because we've been covering the job market
Mhm.
in the past 30 minutes. So I think the big thing is, yeah, keep working hard, keep that job, put things in perspective, budget, right? We can't stress that enough. But in the long run, it's going to pay off in a good way.
I mean, you could some of the some of the adages, such as like what you said, keep at it and invest for the future. Yeah, some of that is now even being threatened.
Yep.
Specifically, the investment for the future because, hey, it's election year, whether we like it or not. And what's been dominating the headlines, besides, everything falling apart, is the tax reforms on investments, specifically capital gains, specifically
Oh, don't get me fucking
unrealized
started.
capital gains.
Yep.
And I have to say there's an article from the Hill that that calls one of these proposals on unrealized gains tax so dumb it's historic. And I,
Yeah.
and I think that's fantastic because here's what I see. You have the present economy is constraining your present. And now you have some people that are proposing what could very well kill your future. Right? So it comes to a point it's like what are you going to do? It's literally almost you can't win one way or the other. And again, we mentioned the other show. This is why it's so absolutely critical that you vote, but more importantly that you understand the issues. Just as the jobs start, well, this wave anyway, started in tech, and is going to have a lot of knock-on effects to all the other industries that support it, which are pretty much all of them. So too do some of these legislative reforms are going to end up hurting every single American. But that's the thing; they're being pitched as just toward the absolute top. But I don't even understand if the people who are proposing them comprehend what all the consequences could be.
Right. I mean, let's take a step back.
All
What is
right,
unrealized capital gains? All right. So, unrealized capital gains means that currently the way taxes work with capital gains is whenever you make an investment, whether it's in the stock market, whether it's in a startup company, whether it's in a property, right? So whatever it is, if that grows in value, right, and then you cash it out, that's when you get taxed.
yes,
So that's how it's done. So if your stock portfolio went from $10 to $100, you get taxed on that $90, right? If your home value goes from 100,000 to 300,000, you get taxed on that 200,000. And you invest a startup, you give them 100,000, now they're worth 10 million. You just have a hell of a gain, but they
yeah,
tax you on that difference.
yeah,
Unrealized gains means they're going to tax you regardless if you cashed out or not, which
right,
is scary, right? Because the whole point of investing is that you put money into an asset and you want it to grow, and you
mm,
keep investing in it or keep sitting on it until it grows, right?
yeah,
And then you get taxed afterwards if you cash it out. So if you do unrealized capital gains tax, that is literally going to crash the stock market. That's going to put investing in this country to a grinding halt, right?
yeah,
Because if a startup company comes to us for an investment on our venture side, why bother, right?
yeah,
Because startup investing is already risky as it is,
mm-hmm.
right? But then to know that if you do grow the value, that I have to pay unrealized capital gains tax every year, that's dangerous.
Well, how,
Stock
and
market's
that's
the
the thing,
same
how are you
way.
going to pay it? Right? Like you said,
Yeah,
investing's going to grind to a halt. How am I
yeah,
going to pay, if I invest in a company and it doubles in value? Where am I supposed to get the money to pay for the unrealized gains that by definition I haven't realized? If I sell out my stake, yeah, fine. I'll happily pay taxes on that. I don't care.
yeah.
That's how it should be. But here's what people don't realize. A lot of these policies are so absolutely ridiculous, because they start at the top. Like, yeah, it's unfair, whatever, but don't worry about it. We're only going to tax the top 1%. Okay. Well, here's the problem with that. It always goes down, right? And again, the article mentions the taxes from the Spanish American War, which,
Yeah.
by the way, was in 1898 and lasted less than a year, and it was meant to tax the telephones because back then only the rich had telephones. The tax on long distance access, which was one of the descendants, ended in 2006. That's how this works. They pass a policy that's really focused, and it ends up starting to creep down and down and down and affecting more and more people. Income tax used to only be for the top tier. I don't know of anyone who's gainfully employed these days that doesn't pay income tax, right?
Yep.
And that's the problem. They tailor it very specifically to try to get it through, but then I think they hope that by the time it descends to affect the voters, that we will have forgotten about it. And not to mention, if you unrealized capital gains are what drive most of the investment economy. Like, okay, if I'm gonna have to pay because my $100 stock is now 150, does that mean I get a tax refund when it drops to 75? Probably
Yeah.
not. And that's one of the
Yeah.
problems. It only goes one way.
Right.
You
It's
know?
not well planned out, but on top of that, not only that trickle down, but trickle down economy, right? So everyone's gonna be hurt regardless of what's gonna happen.
Hmm.
Not only that, right? Not only do the taxes then continue to spread, but also the knockdown effects of investing stopping, right?
Yeah.
Investing is a big part of our economy, and you stop that, everyone's gonna be hurting.
Well, they'll
Part-time
leave.
jobs, full-time jobs. Every American will be negatively affected, other than government workers. But
Maybe that's the end game. Maybe they want us all to work for Uncle Sam, and we want no private industry
yeah,
whatsoever.
that part
Maybe
I'm going
that's
to
the goal.
UAE with the golden visa. Uh, but no, yeah. So there's two sides to this. Eventually, everyone will get taxed, and number two, the trickle down effect from the economic standpoint would be detrimental. I mean,
Yeah.
it would be dangerous to see what happens. So you have that side. Excuse me, Olipop. So that so you have that issue, right, with that tax reform, and I forgot his name is. He's the economic advisor to that campaign, and
Hmm.
I also challenge him to a live stream and to a debate publicly about how dumb he is and how his economic proposal on this is so idiotic, and it explains why he went to Yale. And he's one of the people that just drive me
Yeah.
insane. Harvard, okay, but
Ava.
no, I mean I remember he was on CNBC, right? I sent you the clip,
Oh yeah,
and
yeah.
him
He
trying to
got
explain it,
obliterated.
right? And the fact that he's still trying to do, I saw like his X account and trying to justify this,
Yeah,
right? It's
no.
like a flat earther, right? I mean, it's just so dumb beyond belief, and I hope I get the chance to debate this dumbass and really bury him so he never able has a position that could influence policy ever again because he's truly dumb beyond belief. And then you have another side, right, which is also not better, right, which is imposing tariffs across the board. Look, I
Oh
mean,
yeah.
tariffs can be okay if it's targeted for a specific reason, right?
Right.
But to do tariffs across the board, even if it's targeted, but targeted on a mass scale, that's also dangerous because then that affects consumers negatively, but it also drives up costs for companies.
Yes.
So that's another bad thing. So that's why this election is so fascinating because all the economic advisors in this fucking sphere of politics are all dumber than. I mean, I swore a lot of these people came from flat Earth camps, if that exists, right?
Oh,
So
yeah, Vin. Not only do they exist, but they claim to have members from around the world. How's that for irony?
they say that around the
And
world.
yeah, they actually
Wow,
print that. Yeah.
wow. But okay, interesting. So the planes turn back around to get to the other side of the planet. Yeah.
I don't know. I don't speak
Um,
stupid.
but no, so yeah, so you have this other side that's trying to run tariffs, and that didn't go well under William Taft. Okay, back in the late
Nor under
1800s,
McKinley either.
or McKinley, sorry, yeah,
Yeah.
or late 1800s, early 1900s, right? That didn't go well, because being isolated is not the way it goes today. The United
Hmm.
States of America thrives from legal immigration. Look, I totally get it. The legal immigration is out of hand, and that needs to be controlled. That's really bad. I mean, that's I guess one way of addressing the slowing population, but maybe we should do this in a more efficient, effective way that attracts the best talent and the
Hmm.
right people, and not a bunch of criminals. I'm not saying they all are. I'm just saying there's a lot of bad people are coming through, and this is a fact. I mean, even CNN and ABC and all those guys are reporting this, so you can't just say it's one side of the news or whatever. People are seeing this. Um, but back to the point, it's tariffs will hurt because I think they said what if they do even just the basic tariffs that other side's proposing, right? It's
Yeah, I
going to
think it's
cost
eight
Americans
hundred
anywhere
bucks
from
a year
three
extra.
no 3 to 5 thousand a year,
3 to 5.
uh,
Okay, geez, wow.
which is a lot, right? And that's just the general over. I mean, it could be a little less, it could be a little bit more, but that's just in general. And that's only the consumer, but then that affects also the companies, right? Because the companies
Hmm.
have to deal with that expense, and some of it can absorb it, some
Right.
can't. And then and if you do this, but consumers are already hurting with the labor market we discussed, with the credit issue and with the debt issue and all that sorts, that's only going to brew more. If anything, a firm and the dumbasses of BNPL will thrive more because people can't continue to afford things.
They won't have a
Uh,
choice.
because they won't have a choice. Overall, to our listeners,
Hmm.
economic policy wise, the problem with all candidates right now is they're proposing things that are too extreme because they want to generate more revenue, taxes, instead of actually spending within the means, right? Cutting spending and being more efficient as a government, and then trying to lower taxes and provide more incentive
Hmm.
to companies and to individuals to be able to put more money in their pocket. So that is probably the biggest problem that we're seeing right now in this 2024 election is that people are throwing out these crazy economic policies that just don't make sense. Instead of going, we need to cut spending, we need to be more efficient, and we need to drive
Well,
more
yeah.
incentive, right? More efficient, and we need to drive more incentive to our private sectors, and also not attacking our private sector, right?
Right.
I mean, the whole antitrust issue right now, like with Kroger and Albertsons, with potential attack on Nvidia, right, and then also with the other tech companies and the oil companies and all this. It's just this is not the right time to go
Hmm.
after our own companies while our adversaries are propping theirs own up and trying to attract our companies over there. So
Right.
it's literally the worst thing to do, and it's going to be hurting the economy. And it's just I feel like there's no one in DC right now. In general, I'm not saying no one because we're a bit sensitive with that because we have friends there. But most people in DC and policymakers, both currently sitting or candidates, are just outright just out of their damn minds and are not thinking sensitively. They're not thinking with their you know what? They're just not thinking. Uh, and and I feel like they're just listening to a bunch of flat earthers and trying to prop things up when it shouldn't be propped up. And I feel like everyone's just hallucinating. Just like
Boy.
early in the episode, right? With all these analysts and economists say, "Oh, the economy's fine," all this kind of stuff, and
Yeah.
the S&P going up when the labor market's going like this, and then now you're seeing these policies being proposed by both sides of the party. It's just chaos across the board, and I think you will agree to this. We talked about this. I think we just need a good old fashioned bitch slap to the face of the economy. Uh, because
I think
you and
it's
I
coming
have,
whether or not we want it.
right, and you and I have been calling for this. I mean, you and I
Yeah.
sadly have called for this because now don't let our listeners know we would have changed our position if we saw changes, but
Of course.
nothing yet has changed our minds and our analysis. Everything is continuing to get worse, and it's continuing to validate what we're seeing, which is going to be a recession, stagflation type of situation, which is not good. And I think people just need to to pucker up a little bit and prepare for it. I know for our portfolio as an investor, we are adjusting properly, right, to manage risk.
Hmm.
And we're still up what 70+% overall as a fund, and this year
2 years,
over
yeah.
I know
About 20 for
25
the year.
about 20 to 25% for the year. But we're always looking at those things because again, there's always going to be good parts of the economy you can invest in, despite a recession or stagflation. But you have to be able to identify that and not be hallucinating like 99% of Wall Street, who think everything is just lordy-toity unicorn dancing and a bunch of fairies running around, right? Like, oh, everything is fine. Not really. So
No,
valuations
things
are
aren't fine.
way, yeah.
Things cannot be fine when the American savings rate is 3.5%, and the average since the 1960s has been 8.5. Like
And
this is
stock
not. This
buybacks
is
are an
not.
all-time high,
Yeah.
right?
Oh yeah.
and earnings are getting iffy. And there's always, you look at a lot of these earnings reports, there's always some kind of fluffy marshmallow being topped on, right? It's like shitty ice cream, and then you just put a bunch of whipped cream on top, a bunch of cherries and sprinkles on it. But really, in reality, the
You
ice
mean
cream sucks
pie?
ass, right? So it's like, hold on a second here. But then on the opposite side, I saw this Nvidia, right? I get it. Nvidia is trading at crazy amounts, but if you actually look at their earnings underneath, they were just fine. I mean, they year-over-year gains.
Yeah.
Each sector that they're in are growing rapidly. They have these new products, right, coming out that can generate billions over the next several years or decade.
Hmm.
But yet people said it wasn't enough, and their stocks dropped. And I'm going, what the hell is wrong? Like
No,
fundamentally, when a
they're
business
yeah,
does well and they're
yeah,
projecting good numbers, then it's a good investment. So
yeah.
that's why we just bought a little bit more or hold. We're not selling because it doesn't make sense, and it's a long hold. Obviously, the price is going to continue to fluctuate. But no, I mean nothing makes sense.
No, I think I think a lot of this is going to combine to create some very bad news. Like you touched on some good points there. I mean, first of all, are Nvidia being subpoenaed or not? We don't know because one day they are, the other day they're not. Ugh.
Yeah, Nvidia said they have not, but there definitely is an open not investigation but a open case
Yeah,
against Nvidia. So they are looking at it, but they haven't pulled the trigger quite yet.
yeah. And here's the thing: what I see is, aside from the fact that our right now our post COVID deficit from in terms of federal spending is the worst that it's been in Jesus, well over 100 years. What I see is that a lot of these factors I think are just driving people to make worse and worse decisions. Okay, now you mentioned tariffs. I'm not a fan of tariffs. Tariffs have not historically done much good. But do you impose a tariff to raise revenue or to protect domestic industry? And three, I see four possible outcomes. Three of which involve your people in the home country getting screwed. Okay, if you're imposing a tariff to raise revenue, well, so what? That means the tariffs have to be low because they only get paid when goods enter. So you're not going to raise much. You're not going to do a whole lot of protection for domestic industry. If you impose tariffs to protect domestic industry, you don't raise much revenue. So right off the bat, the solving the deficit issue with tariffs is a non-starter. Okay, period. But let's say we take a big swig of stupid and we start laying tariffs on anyway. Okay, well if the foreigner lowers the price, then it doesn't matter. You're not actually protecting anyone. Like, yeah, you're lowering the foreign producer's profit, but so what? What have you done for domestic industry? In any other scenario, the consumer is paying the tariff, or the producer is paying the tariff, or the exporter is going to be the one that gets hit. So you are literally solving nothing, right? Like, I think we're living in an era of, like we continue saying, drunken spending. We need to have not even just an economic reckoning from macro forces. We need people in charge that actually say, look, we need to cut this out. All right, like scale back the budget, start slashing left and right, because you cannot continue to run the entire country on debt. All right, if you and I run ourselves on debt, guess what? We're going to end up bankrupt, or maybe in debtor's prison when
Yeah,
we
because
can't
we
pay
can't print
anything.
money. Yeah,
Yeah, because we can't print money, not
yeah,
legally. Okay,
yep.
if they don't cut spending and they keep running this country on debt, they're going to keep devaluing our currency, and they're going to give our adversaries more power. Because whether I know it's unpopular to say that not everybody in the planet likes us and we don't always get along, but BRICS is a serious threat.
Hmm.
The effort to dethrone the almighty dollar is real. Okay, And whether you're a Democrat, Republican, Episcopalian, like I don't care, you cannot support that. If you are an American, you cannot support actions that are going to weaken our own country. It doesn't matter what the talking heads say, you know. But
Yeah, because at
who's
the end of the
holding
day,
the
it
fort
hurts
now?
us individually. End of the
Oh, it's
day,
screwing
the
us
life you're
individually.
enjoying now, right? And yes, there's tough moments in everyone's lives, financially and everything. But the ability to go to the store and buy things, yes, prices have gone up, but again, to be able to afford those things and to enjoy what you have on a daily basis, go out to eat, right? Cava or Chipotle or whatnot, and stores.
Nice
Yes,
shameless plug there.
shameless plug. Or have a nice $2.50 Olipop drink.
Must be
Um,
nice.
will be a whole lot different, right?
Yeah.
If BRICS succeeds and if we don't control our spending, because look at Argentina, right? Before their current president. I mean, all of a
Yep.
sudden, Olipop becomes $10. Chipotle is $100 a bowl. So people have to put those things in perspective. And I think one of the biggest questions I know we'll get, but we have to address it now, right? Because I'm thinking our listeners, as they're listening through this, well, which side is better economically, right? Do you deal with tariffs, right, and some other things, or do you deal with unrealized capital gains? But there have been some good proposals, right, like tax benefits to small businesses, but the other
Yeah,
side
fifty
has
thousand
too,
from 5,000.
right? So I mean,
For exemptions. That's
both
not bad.
sides have both sides have offered some incentives,
Yeah.
right, in addition to their wacky overall policies. But which one will hurt a little bit more? And personally, I believe doing with tariffs can be a little bit better. It's not going to be good, but I think the impact of unrealized capital gains
Oh yeah.
will be dramatic. But again, Congress has to approve that, right?
Of course.
Tariffs, a president can apply it without congressional approval. Correct me if I'm wrong, but I believe that's the case. And um, so it's interesting to me. I should know that on top of my head. I'm just it's been a long day. Um,
So,
but
according to Google, the Trade Act of '74 allows the president to impose a
right,
15% tariff for 150 days if there's an adverse impact on national security from imports.
and in today's world, you can make a
Well,
case for that.
again, you want to talk national security impacts and economics.
Yeah,
What does most of our tech run on? Everything
yeah,
from the iPhone SE to the
yeah,
F-35 or things that actually work.
yeah.
They run on material that we don't make here.
Right.
So,
So if the other side does tariffs, but they cut taxes, because proposed tax cuts are pretty good.
they're generous, yeah.
They're generous, and I think it offsets it, right? So if a person, so let's say an average family has to pay an additional $1,500 because of
Yeah.
tariffs, but they get a $3,000, $2,000 tax break.
Yep.
Overall, you win,
Yes.
right? Now the other side, right, raises taxes.
Hmm.
I know they want to hold on raising taxes for up to 400,000, right, which is
Right.
good. But then unrealized capital gains plays a role. That's not good, right? And so, and if anything, the other side is just continue what the current admin's doing. I don't know there's a benefit to that. So again, I don't think either side is the best choice, but I think people will just, we're not endorsing anyone. I just think you just got to sit down, right, when you vote to consider everything we've said and
Hmm.
see what benefits you more. End of the day, right? End of the day, you got to look out for yourself.
Yeah.
Which is going to be worse off for you financially? And you got to vote for the better one, obviously. So, and everyone's going to have a different opinion, and we respect that. And I think this country needs to respect each other's opinions more,
Yeah.
and not go ballistic on one another. But I think we've
And so do you.
provided, yeah, but I think we've been able to provide some good basic, easily digestible proposals that each side provided, and I think now it's up to our listeners to decide for themselves. But you are seeing the writing on the wall as we projected, right? Despite what you listen to, I mean, it's the facts are there. Labor market, it's weakening. S&P is all over the place.
Yeah.
Inflation is not one yet. Cost of goods are still going up a little bit, right? I mean, end of the day, people have to have the distinction when they read this. just because they said it eased off doesn't mean it didn't go up, right?
Right.
Because that's how the numbers work, right? It's continuing to go up is the problem in many
Yeah.
aspects. But just because it went from 3.0 to 3.2 and eased off doesn't mean it didn't go up. It still went up 3.2%.
Yeah.
So that's where people have to have a realistic, people have to have understanding of when they read or hear the headlines. That's what they have to understand. Now, if it goes from 3.0 to 2.8, okay, it's starting to ease off. I
Yeah.
mean, you are seeing that a little bit recently, but it's only been a couple months. So
Correct.
clearly we haven't won yet. We're still in third and goal. And then you're seeing headlines, and we confirm this, banks are bracing for consumers to stop paying off their credit cards. The
Mm-hmm.
fact that banks are seeing that too is concerning. So again, writings on the wall, um, policy making is going to be extremely vital. And this is why from now until the election, it's going to be volatile. And then a little bit after that, right, with the markets and everything. So
Right.
until, the new administration kicks in. But everyone just needs to really this is going to be a very critical election, for multiple reasons, but for our sake of our podcast,
Sure.
financially, it's going to be crucial. So I think people really got to think thoroughly, hear us out, do your own research as well, or DM us, ask us questions. We're more than happy to address it, which we do. We do get a lot of messages,
Mm-hmm.
and go from there. So, but regardless, we'll respect your opinion, as everyone should, and yeah, and we'll see what the hell happens.
Yeah.
And
I
also
mean,
look at
like I
this. I
always
mean,
say,
yeah,
everyone's got the right to be wrong. Even us.
yeah. I mean, look, we don't get everything right.
No, I mean,
We don't.
we tend to favor a freer market for obvious
Yeah,
reasons, right?
yeah,
And and you can also you can make the argument that some protectionist policies actually spur innovation. Like I know, in the NAFTA days, there were some shenanigans played with regard to how much value add do you put into a good to get it to bypass the tariff, and there's a lot of complexity that was involved. But honestly, I would I think we as a country would be better off with that than kneecapping ourselves because it doesn't matter how you spin it. The all
yeah.
economies
And Brooks will
op-
take advantage for sure.
well, God, yeah, yeah. All economies are built on hope. Like, yeah, you got to produce something, right?
Yeah,
But I've never seen a successful company that trades at a PE of under one, right? It's
yeah,
always some multiple because you're expecting tomorrow to be better. If you start messing with that, like honestly, we might as well just go back to subsistence farming because there's not going to be any engine to drive anything else forward. But no,
yeah,
I agree. Absolutely read up and for the love of God, learn the difference between a rate and a level. It's like
yeah,
inflation's cooling. Why is everything so expensive? Well, that just means it's getting more expensive more slowly.
yeah. I mean, look, food prices in the U.S. reach a new all-time high in July, right? I mean,
But
over
so
the
is
last
nutrition, right?
Right. I mean, over the last decade, food prices at home and away are now up 30% and 51%, respectively. Think
Good
about that,
Lord.
right? I mean, since 2020, food prices at home have increased 22%, and food prices away from home are up 27%. So that's just from the past 4 years. And
Jeez.
then transportation and housing have risen 27% and 24%, respectively, right? And now here's the clear thing. So not
Yeah.
only do you see inflation bound out over, then you see this food costs going up, transportation and housing going up. But then now you also see the US dollar has lost nearly 25% of its purchasing power in just 4 years. At the
Yeah.
same time, wage growth has slowed. So you're seeing the basic necessities here being an issue. And the reason why the US dollar is weakening is not only is it confidence,
Hmm.
but the amount of debt and the amount of spending and the amount of printing that's happening. So to bring everything together and why this is important,
Hmm.
the national debt plays a huge role all the way down to you, the listener,
Yeah.
because every day, all the cash that you hold, the U.S. dollar that you hold, continues to get weaker because of the tremendous spending. Because the more they spend, the more the dollar does weaken. So that's just how economics works. So that is really a key point that everyone this is a key moment and where I hope people really embrace is that People are like, oh, why are things costing more? Things cost more. There are factors, right?
Yeah,
Climate and inflation and all that. Stagflation will definitely play a role, but the government spending, right, plays a huge role in this because of the weakening dollar.
agreed.
So I really hope that. So again, we go to the voting booth. You got to think about that. Everyone should ask each candidate how the hell are you going to control spending. If they don't have a plan to address that, there's a problem.
A
And
lot of
speaking
that's
of
just
house,
taking responsibility back as a people, right?
yeah,
Like political theater is entertaining, okay,
yeah,
but if I want to be entertained, I'll go on Prime and rent something. We'll go watch The Departed again.
yeah, right,
Like there's a line which was like, okay, now stop entertaining me and tell me how you're actually going to prevent my future from getting screwed over. That's
yeah,
what I want to hear from you as a potentially elected official.
yeah. And you and I both know this, and everyone should know this if you study history. In times of economic prosperity, a lot of other issues get addressed
Yes.
appropriately, right? Social issues, all issues that people care about.
Well,
But
you
when
have
the
the time
economy
and the money to address them.
Right. But when the economy is shit and everyone's struggling, and everyone's frustrated and affording the bills, you're not going to be able to address those issues effectively.
Right.
So I think 2024 should be focused on the financial aspect of the candidates because everything else can be addressed. Speaking of home, and another thing here, speaking of homes and transportation or housing and transportation going up,
Hmm.
now another red flag that we're seeing, and this is why we're saying recession stagflation, is U.S. home builders are now facing a credit crunch because banks are now starting to cut lending,
Yep.
right? Even with the projected interest rate cuts, they're still cutting lending.
Well,
So
that's really going to do nothing at all to help a housing affordability issue, is it?
no, so it is a fascinating situation that is brewing, that is going on, and to address a lot of the comments that we've had in the past, about how difficult it is for people to actually manage and the stress of it, because we preach, right, about budgeting and being responsible with your money. We totally get it. It is difficult, right? I mean, we got a lot of comments of people saying how tough and how upset they are, and it's not as easy, and we get it. We understand because look, policymakers are not making it easy for you, as we've
Right.
said in the past, just over an hour, because of their drunken spending and because of their stupid flat Earth equivalent policies. That's not helpful. But we just want to give you a message of hope. Going, you need to continue to do so, just because you need to look out for yourself, right? You got to look out for numero uno. End of the day, right? Because you got bills to pay. You got yourself and your family, to feed and to house. Just don't give up hope, because if you zoom out in history, despite of all these moments, things do come out better. And I think we just got to suffer a little bit more until we get better, right? And regardless of the candidate, we're going to go through this economic cycle, but you just got to pick the one that's better to ride this wave with, until
Yeah.
things get better. But don't lose hope, everyone. And there are tools out there that can help you with budgeting instead of just a spreadsheet. I know we love spreadsheets, but everyone has the time and patience
By
for that.
we,
But
you
there,
mean?
right. I mean, there's Rocket Money app, there's QuickBooks Personal. So there are
Hmm.
things out there to help you, but just don't lose faith, don't lose hope. Whether you're part-time worker, full-time worker, lower middle class, or a millionaire, and whichever it is, don't lose faith. I think we'll get through this and all that. So, but switching gears real quick, by the way,
Yeah.
there was a report that came out, because you and I get monthly updates on Bloomberg and
Hmm.
quarterly about how each fund is performing year to date. I'm proud to
Ah,
say
yeah, the
that,
league tables.
right, looking
Let's
at the
discuss.
right, I love seeing this because you look at the top funds that are similar to ours, right?
Uh-huh.
We are a multi-strategy, long equity type of a
Hmm.
fund. We're dynamic. I mean, we're not just the typical, boring, just get you 5-6% by just throwing shit to ETFs. We actually do our homework, and
Yeah,
we
we're
know what's go
multi-strategy. We either buy or we don't buy.
right, and and we we study companies. We know what's going on in DC. We know what's going on internationally with other governments and everything. So proud to say that we are number one across the board
Yeah.
in our, so 0.72 is, which is a big one, is 10% year to date.
Mm.
You look at Schonfield, 11.8. The
It's
closest
not
one
bad.
is DE Shaw, 15.7, as well
Mm.
as Marshall Wasp Market Neutral Tops, 18.5. Year to date, we are close to 25%. So I think, it just proves to show that the insights we're providing to you in this podcast is meaningful because that's what we believe, right? And not believe like as in some kind of faith. It's we know it's fact. We study what's going on. It's black and white, and we're posturing our portfolios to prepare for what we see. So clearly, we're continuing to deliver extremely great returns, while posturing it to make sure that we cover risk, right, because of what's coming about. But and then we just be patient. I know we preach patience all the time, but patience does win.
I mean, there is something we said for boring being sexy,
Yeah,
but we are. But look at the bright side, or rather, look at the dark cloud instead of the silver lining. We're really trailing all of those funds in terms of overhead.
yeah, that's true. Yeah.
We don't.
No, we're very simple people. I mean, we don't need a fancy office. We don't need all these different things or $10,000 lavish dinners. I mean, we're just simple people. I mean, just look at our podcast backgrounds. We just keep things
We got
simple
the
and
bull. That's all we
right. You
need.
got the bowl. I know where my bowl is. Uh, but uh,
It's actually right here. I stole it when you weren't watching.
you son of a. But no, I mean, we're just simple. We just love what we do, and we keep things simple. We study and we stick to fundamentals and patience. And I think that needs to be brought back
Yeah.
into our economy, into the financial markets, and stop selling the bullshit, make believe, or restructure product that we knew hurt the economy before. That's why every time I see a damn person come to the office with a damn Patagonia vest or whatever the fuck they wear these days,
I'm gonna get
uh,
you one. I'm gonna
no,
make you
please
one
don't.
on the podcast.
Right? And they're trying to sell us something or pitch us something. We'll go, wait, but didn't we see that in '08 or in 2016 or something? No. So, um, and that's why we love this podcast. We're just trying to give everyday listeners a perspective, insight from Wall Street on what's going
Mhm.
on and what to look for, and to be prepared on what's gonna happen.
That's absolutely true. I think you hit on something really interesting there that I don't think gets enough airplay, which is when times are good, you actually get to fix problems, right? And I know I know there's been a push for things like subsidizing home purchases, 20, 25 grand, whatever. To me, I think that just means house prices are going to increase by 25 grand, to
Yeah,
be honest with you. But I think when you address the fundamental, the structural issues, like, I don't know, maybe a government that doesn't spend twice what it makes. Maybe.
yeah,
For example, uh, you do you do get a lot of not just attention budget, but you actually get a lot of real budget to address, the issues. And I think it was back in the first Clinton bid, where his strategist was famous for saying it's the economy, stupid, and
we need him
making
back.
that a huh?
We need him back. I mean, Clinton actually
Yeah, I
balanced the
think that
budget.
strategist is still alive, actually.
Yeah, I mean they legit balanced the budget.
Yeah, it's stuff like that you can only feed people empty hope for so long. Like, well, we want to address X. Okay, well, how? Hope doesn't pay my bills. Okay, hope doesn't pay anybody's bills except if you're the politician selling it. And
Hmm.
I think that's something that we really need to embrace as a country. And again, not advocating one side or the other. All right, make up your own mind and then live with the consequences. That's the American way. But I think it's just as a point of personal pride. I think we need to embrace that societally and say, like, you know what, we're getting back to basics. All right, enough with all the fluff, enough with all the headline stealing, rage
Hmm.
bait. Just get back to boring. All right, this is the reality. We have half dozen countries that want to destroy us. All right, we have a responsibility. You in Washington have a responsibility to 335 plus million people who depend on you for their safety and well-being. Do your damn jobs, right? And don't forget, this is not a game. Like we
No.
are the most powerful economy in the history of mankind, and that's resting on the shoulders of our policymakers and our legislators. Take
Yeah.
that seriously.
Yeah, and I do have hope for the next generation. I mean, ours, right? Millennials and then Gen Z even. I mean, millennials and Gen Z get a bad rap, but I think you're starting to see as they get older, right? Not only with influence from folks like us, but I think they're starting to see the reality of poor policy making over the years,
Yeah.
right? And I think you're starting to see more of a step back for them going, wait, this is, we need to get back to what you said, the basics, and start spending more efficiently and focusing on ourselves and being more responsible. Social issues, I get it. I get that side, but financially, I'm starting to see a little bit of a difference
Hmm.
with millennials and Gen Z with their money. So it is it's something to keep an eye on with them because look, I have a nephew that's Gen Z, and I know him and his friends, and they're pretty conservative with their money, surprisingly. They're not as lavish as people would think they are. My generation's a
No
mix,
avocado
depending,
toast.
pretty much. Sure. But no, I mean, you look at millennials, the older side, okay, but the younger side, I'm sorry, the younger side, the millennials, you're starting to see a little shift there too, right? So that's the hope. I mean, the the whole notion of, again, I'm not either side, right? The whole thing about great again, America, right? Making it great. I get it, but we weren't the greatest all the time, right? It's like I don't want to go back to the Great Depression. I'm gonna go back to the Great Recession. I'm gonna go back. You know what I mean? So it's like, how about America forward, right? I think we need to take the lessons that we've learned, right? Make it, learn from it, and then make better policies going forward. But we also shouldn't go too radical on the other side either and be like this, all this fluff and just holding hands and thinking everyone loves us. That's not how it works,
No,
especially
that's
economically.
yeah, that's not only realistic, it's not even human nature.
No. So it's we just need to deal with facts, especially financially, black and white, and get back to fundamentals. And I think, it starts with the everyday person, and then the trickle down effect and the bottom up. So I think everyone just needs to get their senses together.
That's probably one of the most polite ways that you could have put it.
Yeah, no, I'm trying to be polite. Uh, for the sake of our podcast, which is getting a lot of listeners and viewers, so we really appreciate
Yeah, thank you
all the
all.
support. But please DM us or whatever, or comment and send us any questions or comments. Really appreciate the support, and we look forward to more episodes. Also, if you get a chance, listen to our other podcast, Abolishing Nonsense. It is the podcast is what the title is. We're abolishing nonsense. We're addressing issues, but we're really focused on men's mental health, and I think that's really important. Men need to be able to talk more about their issues and how to deal with them with solutions, not just being a bunch of whining crybabies or being less of a man.
Maybe
Yeah.
that's
So
why you're not a therapist, Vin.
no, I'll be a terrible therapist. Uh,
Yeah.
yeah, but but
Or
to give you
maybe the best
opinions,
one ever. Who knows?
but to give you opinions about business or money, that'd be fine. It's gonna be a brutal delivery on how to do it,
You know?
but it definitely works. All right, everyone. We really appreciate your support. Ask us any questions, and we look forward to our next episode.
Thanks a lot.